everyone. Today on January 26th, here from Vancouver. This is Canagold's webinar, our progress on infill drilling, resource expansion of high-grade gold in northwestern BC, and our plans for 2022. That's a long title, but I think we have some very exciting news today. With me is our our CEO and director, Scott Eldridge. How are you, Scott?
Excellent. Thanks, Knox.
And our VP Exploration, Troy Gill.
Hi, everyone.
So we're going to have Scott's going to give a summary update on the company, just to refresh everyone's memory on where we're at and what we're doing. And then Troy is going to delve deeper into the resource model. Of course, we do have some news that came out today on some of our infill drilling. And at the completion of all that, actually, while you're listening, if you have any questions, just click on the Q&A button to the right-hand side at any time, and we'll collect all the questions. And at the end of the presentation, I'll read the questions in order of timing and priority and relevance to the audience. And so we're looking forward to a good interactive presentation with everyone. So with that, I will pass the baton over to Scott to talk about our company and our news today.
Excellent. Thank you, Knox. So everyone, thanks for listening in today. I guess we can still say Happy New Year because we're in January. And at New Polaris, things are off to an amazing start for us for 2022. So just as a brief reminder, I'm Scott Eldridge, CEO and director of the company. And Canagold is 100% focused on our flagship asset, New Polaris, located right here in our home province of BC. And we'll spend most of our time and attention chatting about that with you here today. Probably most people have had an opportunity to browse our news release that went out this morning before market, where we've now released an additional 5 holes worth of drilling at New Polaris. And besides the fact that these are high-grade, significantly wide intercepts, we're also seeing VG, visible gold, which is not necessarily common in the system, but it's definitely getting us more excited. And with every drill hole that we receive back from the lab, our excitement, our confidence is growing in this project as we move forward and de-risk it. So the general theme today between Troy and I will be sort of a corporate presentation, but more specifically an exploration update, talking about the drill program, where we've actually finished 24,000 meters, but we've only had a chance to publish 22 out of 47 holes with the backlog in the assay labs. So definitely more of these results to come beyond what you've seen today. So I will point everyone to our disclaimer, our standard cautionary note, if you want to take a moment to peruse that. So let's just start off with the investor highlights. So just a brief history on the company. August 2020, we decided to hit the reset button, and we had a series of corporate level changes, which included changing the name from CanArc to Canagold to further reflect our corporate level strategy that we're now 100% focused on New Polaris, whereas in the past, the company had spent time and attention on projects in the US, in Mexico, for example. But we decided let's make it a very clear picture for our shareholders and focus our attention and keep it simple on New Polaris, which is a spectacular asset. Most people are familiar with the grade of this project. It's 10 grams per ton. That's the diluted grade with 20% mining dilution rate factored in. We've got a very robust PEA on it with an exciting mine plan as we eventually move into a feasibility study later this year. And towards the end of the discussion here, we'll just talk about our peer comps, and you'll probably come to the same conclusion as us that we are undervalued compared to our peers, and this looks like an interesting opportunity. So a snapshot of our public company information. We have 3 listings: TSX Big Board in Canada, OTCQB in the US, and Frankfurt over in Germany. We recently closed a flow-through financing where we originally announced $2 million. We subsequently closed that oversubscribed at 2.3, again done at 50 cents, no warrants attached to that. So that means we're fully funded for our ongoing drilling, where we've commenced in January here through the winter, another 6,000 meters, and Troy will talk in more detail about that. And in terms of our shareholders, Sun Valley out of Dubai, not the Canadian fund, Eric Sprott, the Ruffer Gold Fund out of London, England, our founder and chairman, Brad Cook, who many people know, as well as a few high net worth individuals out of Europe and the US. Collectively, that group of 6 shareholders controls about 40% of the company. So moving on to the management side of the things, I've been in the metals and mining industry for about 12 years, mostly in financial roles. Started off as an analyst, ran my own merchant banking firm, and now I've been on the issuer side for about the last 5 years, and I've held the position of CEO of CanaGold now for 3 years. I was offered the opportunity by our founder and chairman, Brad Cook. I had a pre-existing relationship with Brad. His name speaks for itself. Many people are familiar with him as the founder of Endeavour Silver. Gary Biles is our president and COO. So he's the lead technical engineer to move New Polaris forward. Gary's a mine builder, mine operator. He's done it 4 times in his career. 3 of those were high-grade undergrounds, including the fabulously high-grade Eskay Creek right here in BC, where Gary was part of the build and mine manager for Homestake before they were taken over. Knox Henderson joined us about 6 months ago, is our VP Corp Dev, coming off very recent success with Kodiak Copper, as well as Great Bear, and a nice feather in the cap of the team over there who just sold that to Kinross. So congrats there. Troy Gill is our VP Exploration, Australian. He hails out of Rio Tinto. He twice won their internal award for Discovery of the Year. And prior to that, he gained some valuable underground mining experience working at Peak Gold Mines, which was running about a 6 gram per ton underground mine at the time. And then rounding off our management is Philip Yee, our CFO, chartered accountant. Deepak Malhotra is our lead technical director, PhD metallurgist. Martin Burion is our lead on corporate governance. Andrew Bowering joined the board in August 2020, another name that many people recognize, a very successful mining entrepreneur out of Vancouver. Some of his most recent success stories that you probably follow include Millennial Lithium, Prime Mining, as well as American Lithium. And then, of course, Brad and myself on the board. So let's dive into the project side of things. So just very quickly in terms of our portfolio, yes, we have a variety of gold projects. New Polaris is our core asset. It's undoubtedly our flagship. We spend all of our time and attention there. And the other projects in the portfolio, rather than letting them sit there and do nothing, we do look to create shareholder value by optioning these properties out to other companies. And collectively, that portfolio does cover our G&A, given that with any particular project, we receive cash payments, share payments, there's minimum annual property expenditures, and we also maintain an upside in terms of a royalty on these projects. So again, these collectively pay our G&A for the year. So any money that we raise goes directly into the ground at New Polaris. So a brief history on New Polaris. This is a brownfield site, and it enjoys many benefits of being a past producer. So the underground mining activity occurred here sort of in the 30s and 40s, and they were mining underground, but fairly close to surface at a diluted grade of about 10 grams per ton. And during the history there, they recovered about 250,000 ounces of gold in the form of a concentrate. So fast forward to today, what do we have? We have an NI 43-101 million ounces, also at a diluted grade of 10 grams per ton. And based on the PA that was run at $1,500 gold, the numbers speak for themselves. I always like the after-tax figures. The IRR hits 56%. The NPV is over 300 million, and a very quick after-tax payback of under 2 years. So what differs from the past to really unlock value for this project is to produce doré bars at site. And that's exactly how we've designed the flow sheet in the PEA. And that's exactly how we will move forward eventually with the feasibility study to produce doré bars at site, fly them out, and get paid in the same day. Moving on to the location of the project. So our management team, we're all based here in Vancouver. So this is in our home province. Typically, we access the project in and out of Atlin. And once you're in Atlin, it's about an hour or less by either small fixed-wing aircraft or a helicopter to get to the project. So back in May last year, we commenced that 24,000-meter drill program, and we continue to have a fully staffed 20-person exploration camp, currently still running 2 rigs on the site. We sit on Crown grants, which means we own the surface and the mineral rights on this property, which will be very advantageous as we move towards a construction point. And Troy's here to talk about geology, but just at a very high level, this is a mesothermal gold vein system. Not necessarily typical for British Columbia, although I will point out one of our neighbors, the Kensington mine, operated by Core, about 120 kilometers away from us on the Alaskan side, is also a mesothermal system. And we watch very closely, their costing and processing and all that kind of stuff. And, that gives a great degree of confidence in our PA numbers. They're exactly the same as what they're seeing at Kensington. So let's move along to our resource table. So our resources are split about 50-50 between inferred and indicated. And the primary purpose of the drilling that we started in May was to infill the inferred. The current spacing is about 40 meters. We need to tighten that down to 20 to galvanize the inferred and move it up to M&I to become future proven and probable reserves. And that drilling has been very, very successful, where we've now seen 22 holes that are excellent grade, excellent mining width, and these are confirmatory type holes that will allow us to move the inferred up category. And in addition to that, we're also seeing exciting opportunities to make the 1 million ounces bigger, which is certainly our ultimate goal, as that would directly tie into the production profile where we're looking to slightly increase that. So Troy, if you're there, I'm going to pass the mic over to you if you want to pick up on slide 11 with a nice mugshot of yourself.
Very good. Thanks, Scott. And hello again, everyone. Thanks very much for joining us on the webinar today. So I'll start off with a bit of an update on the current drill program, a program that's been running since May last year and has turned up some very interesting results from time to time, especially samples like the one I'm holding there at over 50 grams per tonne. And you saw on the slide previously there we had almost 2 ounces in another sample. Lots of very high grade, very consistent ore body, very amenable to underground mining. So it's got a lot going for it. We've completed our 24,000 metre initial infill drill program that was budgeted for last year. We finished that heading into December. And with additional funding, decided to keep pushing on while we were active. Everything in camp was up and running and going well into winter conditions. We expanded the drill program to include more infill drilling, just to help us get as much as possible to stabilise and improve on the resource model heading towards the next resource calculation and report. So we still have 2 diamond drill rigs on site. Scott's already mentioned we've released 22 drill holes, including the 5 holes today. That obviously says there's still a lot of results to come. But the fact that we were able to put 5 drill results into a news release today is telling us that the turnaround time for the labs is starting to improve. They're speeding things up, as a lot of other programs finished months ago. We still have a lot of batches of samples in the lab, and I hope to see more and more results very soon. And so you'll see a lot of news coming out in the near future on those. And part of that, with more infill drilling, is we've been able to announce mineralised intervals in parallel vein as part of the C vein system that we're testing here, including results like 17 grams over 8.4 metres. And that's really going to help us heading into the next resource modelling to improve upon the ounces contained in the overall resource, we hope. So let's take a look at the drill plan that was released with today's news, just showing the 5 different holes that we're reporting on. These holes, you see they cluster together kind of in the higher level, but towards the centre of where we were doing the infill drilling, focused on that sort of 300 to 600 metre level. You can see the previous drilling are the X's on the map. That's all Canada drilling since the end of the 80s, early 90s. And we still have some more planned holes that haven't been drilled yet, and the red holes are completed. Some have been reported on, some we're obviously still waiting on results. So these holes are all together there are meant to target a sort of a hole in the inferred resource that we're hoping to upgrade to indicated at about the 300 metre elevation level. That's below surface, of course. We're an underground mine. This is the snapshot from the 3D model that we included in today's news, just to sort of show those new intercepts in amongst some of the previous drilling and how they relate, and in fact, sometimes improve upon some of the previous intercepts that we've seen at this elevation on the C West main. and point to some of the results of high grade 3.8 with 20.7 grams per tonne, and then some longer intervals like 8 metres at 13.5 grams per tonne. The average grade of the resource you've just seen in the table previously is around that 10.5 grams. So anytime we see here an interval that's above that 10 grams is really adding to the robustness, let's say, of the resource model, and in some circumstances will improve the ounces, but it really here the main focus is to infill the drilling to a spacing that we can elevate this inferred areas up to indicated level in a future resource model. And let's review back to some news we put out towards the end of last year, where we were intersecting those other parallel vein sets. And this section came from a November news release. And then we summarized all of the new, what we're referring to as the C9 and C10 veins into one news release right at the end of 2021, including some spectacular results like 17 grams over 8.4 meters, 11 grams over 17.8 meters. That became one of the thickest downhole interval intercepts of the whole New Polaris deposit, including the C West main. So that's quite impressive. And again, we hope to be using these new intervals in a future resource model to improve upon the ounces contained in the resource. So I think at this stage, I'm going to dive right into the 3D model itself. And I really do enjoy being able to have the opportunity to show our shareholders and potential investors from a technical point of view how the work is progressing and helping to improve upon the resource. It's great that I can show people this. So I'm starting this time from a view of, it's very similar to the snapshot we took for today's news release, showing, and you can see them here, the 5 drill holes just in amongst a selection of previous drilling with the very similar intervals around, this is around the 300 meters below surface elevation level. And we're showing that on top of what's the 4 gram per tonne gold cutoff for the block model of the C West main resource. And I think that helps to visualize perhaps what the resource looks like in more of a real world sense. And so if we sort of pan around how those holes relate to each other, maybe zoom back a little, you can see if you compare to the old surveyed areas from the mined out stopes of the Polaris Taku mine, it has a very similar feel to it. And that's because this is the enveloping surface around the block model itself, which you could imagine is how the resource could be mined out, one day once we're down there developing. You can sort of see that the intercepts that we're just releasing now don't quite fit that model, and that's because I can't really change anything at this stage. We need to run a new resource calculation in order to do that. But what we can show is if we switch to the geological model, which is really showing you, once I have the geological logging with the results back, we can then join from interval to interval into what becomes the geological outline of the C West main deposit. And that can be updated as soon as we have those results. And you can see how they're tying in really well. And in fact, at this stage, we have the resource model really well constrained down to probably, this is about the 400 meter below surface level with the infill drilling. And I could add back all the drill holes at this stage.
And so, Troy, the purpose of a lot of this infill drilling is to take the spacing from the inferred from, I'd say, 40 meters down to the 22 that you have in the indicated level.
That's correct. And sorry, it took me a moment to get all those holes on there, but it can show you the sea of drill holes that are forming this geological model now, and really shows how it's all tying together, certainly down to this level where, we're still underway doing a lot of infill drilling. So one thing that was kind of a key feature of these 5 drill holes that we reported on today was the fact we've seen visible gold for the first time in our infill drill program. It's rarely seen with the New Polaris deposit. It's not necessarily the style of mineralization in this geological setting that you see a lot of visible gold. But of course, it's great when you do see it, and it sort of confirms some of the high grades that we see here coming out as gold you can actually see, rather than sort of hidden away, very fine grained as it usually is. One of the features we pointed to about the VG was this post mineralization felsic intrusive dike that cuts through, and it doesn't quite, it definitely doesn't quite split the Seawest Main in half. It just cuts through the northwest corner there. And previously, visible gold had been seen in sort of this section down here, quite close to the dike. But with our drilling, we're actually seeing it now over 100 meters further to the east. And so that's quite interesting, and something that once we get some results back on other holes where we've identified VG, we'll start to look into perhaps what's causing that and how that might change our thinking on the resource in the future.
Is there continuity in the depth of the VG? Is it typically down to 300 meters, or is it above and below that?
Yeah, it's actually on a number of different elevations, up and down dip of the Seawest Main itself. But so far, we've only seen it in close proximity to the dike. And in fact, I think also only on the east side. So, this could be partly because of we're just improving the density, the number of drill holes. So you're getting obviously more and more intercepts. The more times you see the mineralization, the more chance you have to see visible gold. It could simply be because of that. It could be because of another mechanism that we don't quite understand just yet. And obviously, the more holes we drill, the better understanding we're getting. So I'll take the dike back off there just to move it out of the way. And if these intercepts down here have caught anyone's eye so far, you can see all the way out to here and here. These are the C9 and C10 intercepts. So let's just review those for a second and see how they relate to the Seawest Main itself. You can see that some of the last intervals we have up here in drilling, and we've already said before that these two veins will terminate against the number 1 fault, which cuts through and does cut off the main Seawest Main mineralization. But what happens on the east side of that fault is there's 2 veins identified that are both part of the current resource that then head off in other directions on the east side of that fault. And it's quite a simple analogy to make for now, pretty straightforward, that perhaps the C9, C10 represents an offset on the west side of the number 1 fault of at least, this is referred to as the C low east in blue, cuts through, perhaps making a conjugate sort of set of veins with the other eastern vein. And the C9 or C10 could be the continuation of that vein on the other side of the fault. But again, the drilling continues. And if I now add on the holes that we have drilled, but unfortunately we don't quite have results for just yet, you can see I still have a lot of results to come back that will hopefully help develop, produce more intervals, and we'll get the results in and help develop the C9, C10 story as it relates to the rest of the deposit. And further on, the planned holes in pink, if you can now see them amongst the forest of drill holes that's developing, there are more holes planned. You can see right into this level here, infill holes now to help explain further the C9, C10 story. And of course, they will give us additional infill and intercepts on the C West main. I might just remove the number 1 fault that does tend to get in the way of our view a little. Just lastly, to show you where we're heading with the drill program this year and into winter. We've already drilled up to about another 2,000 meters beyond the 24,000 meters from the initial program, and mainly focused on further infill at this, say, 5 to 600 meter level. You can see we already have 2 deep holes completed that in the end ended up just off the edge of the geological model. They both have visual C West main intercepts, so that's great. Unfortunately, I can't tell you much about the results yet until we get those back. But this is the focus now moving forward through winter, working as much as we can to infill the lower section of the C West main deposit itself. And for anyone that's joined us before on the webinars, I tend to start with the zoom into the property. We've sort of gone a bit backwards with this one, but there we are. And I guess I'll leave it at there for the update for now. So just back to the slides. And I'll just put a camera on so I'm back online. You can see we just have a snapshot here of the geological model with all the drilling to date, plus the 2 deep drill holes that we have completed. Unfortunately, we are still waiting on all the results to come in before we are able to announce what's happened with those there. But we also give a nice summary here of some of the better intervals of the C West main and what makes it such a robust model and a very amenable underground mining setup of a deposit. So our 24,000 meter program is completed, and yet drilling is ongoing through winter. I mentioned 2 of those holes, the deep holes, were actually exploration drilling more than definition or infill. And I guess you'd ask the question, why would we have confidence to go ahead and do that style of drilling when we're really trying to infill and prove up the resource itself? If you have a look and compare us to other mesothermal gold deposits, where we mostly compare is actually the older shield parts of Canada to the east, around Red Lake in Ontario, and further east than that, and Timmins and Kirkland, and even into areas like Val d'Or of Quebec, places like that. Very similar ore bodies to what we're seeing in the C West main deposit. And yet here we are, the C West main has been drilled down to about the 600 meter below surface level. A lot of these ore bodies have very deep legs going well beyond 2,000 meters deep. And so we are of the opinion that we're just about only scratching the surface ourselves, let alone what the old timers mined back in the day. There's lots of good reasons why the C West main should have a lot of depth to it to go. So I guess we'll report on that when I have the results. And at this stage, I think I'll hand over back to Scott.
Excellent. Thank you, Troy. So given that we're a high-grade underground development story, we do like to brag and boast about our grade and talk about that, how that compares to the industry average. So everyone knows, it's common knowledge that with any mineral, the industry is highly skewed towards the larger open pits that are sub 1 gram per ton or just over a gram per ton in the gold space. So here we sit at 10.3 grams, which is actually about 7.5 times the industry average. And we've all heard the proverb, grade is king. And that absolutely resonates true with this project, where we sit on the highest quartile of the grade curve. And we'll talk about our PEA, but we actually sit on the lowest quartile of the cost curve. So we have that dual-sided coin of high grade but low cost, which is becoming more and more unique in the gold mining space. And to put that into further context, let's look to operating mines in Canada, which is between Canada and Australia, some of the highest grade commercial scale gold mines in the world. If this were a mine again, it would be the 6th highest grade gold mine in Canada and the 11th highest grade gold mine in the world, which is certainly something to brag about. So we're definitely excited to keep this moving forward. So let's transition into the PEA results. And bear in mind, these were run at a gold price of $1,500, and we've been sitting above 1,800 here for a while. So, plug in your own price deck in the model, and, this is a base case scenario of what the project will look like in terms of the economics. But furthermore to that, it's also a base case of what the production profile looks like. So if we can get a slightly bigger resource, that will have a direct implication to a bigger, better mine plan, where our base case of 80,000 ounces per year in the PEA over an 8.5-year mine life, we'd love to see that grow a little bit and hit 100,000 ounces a year over 10 years and get to that magical million-ounce reserve. And from the drilling that you've heard about with Troy, it certainly feels like we're optimistic that we can move things in that direction. And pair all that in with a low capital cost. As a numbers guy, one of the things I like to look at is what is the NPV to CapEx ratio. Ours is 3-to-1, which is fairly unique in the gold space. A 2.5 score there would be considered a very robust project. And again, we like to look at the after-tax numbers. The IRR hits 56%, and we've got an NPV in Canadian dollars that's touching on $500 million, and all with a very quick after-tax payback of less than 2 years. So come a construction decision, whether it's us or we're taking over, given the margin, this is a project that would be very amenable to debt for project financing. So let's move along to peer comps. So there's a number of ways you can analyze a company at this stage of development. The more common methodology would be enterprise value per resource ounce in the ground. So we're about $21 US an ounce in the ground. And if we look to our peers, and by peers I mean projects in either Canada or the US that are a similar stage of development, the average is more in the $50 range. So we definitely have some ground to make up on our peers to get to that average. And how are we going to do that? We have to deliver at the project level, and you've seen that with the drill results. And as Troy has alluded to, with the backup in the labs, we still have plenty of more results to come. The year's off to a great start, and you'll definitely see more results out of us during Q1 and Q2. So just moving over to a summary, we talked about valuation. Another method would be PNAV. So we're trading at about a 0.1 PNAV, where our peers would be higher than that as an average group. We're very happy to work at New Polaris, but we always do have our eyes and ears open for other opportunities as they arise. But very happy to work at New Polaris. Great support from the First Nations group, from all of our stakeholders, and we'll continue our infill drilling and eventually move into a feasibility study later this year. But in the meantime, there's plenty of value to be unlocked there by our very strong management team that we've run through. And we have a pretty healthy cash position to go and execute on our additional 6,000 meter program. With 2 rigs on the site right now, we have about $4 million in the bank. So we can move along to the Q&A. So, thanks everyone for listening to the three of us, and open format here. If you want to submit your questions to Knox, we're happy to run through the answers.
Yeah, thanks, Scott and Troy. That was a great summary, and good to see the resource model, and very interesting to see that those parallel veins being built out as we move along, because those aren't in the current resource estimate, and certainly represent some additional ounces moving forward. Getting a lot of questions. Most of them have the end game in mind. More about, I guess, Scott, give us sort of the broad strokes in the timeline, because we're going to do some more resource drilling, then maybe a resource estimate And does that lead to a revised, well, first off, a revised resource estimate, but then do we do a revised PEA, or do we go straight to a feasibility? Sort of give us and then, the permitting. All of these questions are related to, when are you going to be into production? When's the feasibility study? When's the PE done? Is there another resource estimate? Those are all the questions. So maybe just lay out a bit of a timeline, to set these expectations.
Yeah, it's a great question, and we've sort of been alluding to the timelines of the project throughout the discussion here. But the one thing I will point out, before we talk about the timeline, is that there's so much value to be unlocked along this path, and we're always focused on what's next. But we've made you on all our promises, and we've delivered at the project level, and there's no reason why we won't continue to do that in 2022. So having said that, the drilling that we're doing right now, the additional 6,000 meters, that would be another, call it approximately 2 months. Then we would have a bit of a wait to get all the assay results in and digest the information. It is a third party, as everyone knows, that does the resource calculation for us. And it really just depends on how large and robust the M&I, measured and indicated resource, is, because that's the foundation to become the proven and probable reserves once we do a feasibility study. If it turns out we're seeing more opportunities to make the resource bigger, or we didn't get a big enough M&I, then we would certainly do a bit more drilling before the feasibility study. But I would certainly say that we should be starting a feasibility study this year, and once it is commenced, the whole program itself would be approximately 8 to 9 months.
So it's unlikely we'd have a revised PEA. We would actually go straight to a feasibility.
Yeah, I just don't see the need for a PEA. We have a PEA. It's very robust. I wouldn't say it's a PFS, but it's moving in that direction, where the project is so advanced that there's no reason to do another PEA. And it's advanced from a resource perspective, a metallurgical perspective, stakeholder perspective. We're ready to jump into the fees, and we're preparing the permitting process and the environmental process to hopefully match up the delivery of a final fees with the permitting coming close in hand to that, to make a timely decision to build, or perhaps there's an M&A event. That all remains to be seen.
Right. So the last thing you want is to have all this resource drilling done, a full feasibility done, and then you have to wait 2 years for your permit. So maybe speak to the permitting process, where we're at in the permitting process, how are we in our community relations, and how all that relates to the permitting process.
Yeah, I mean, you're absolutely right. When you look at other projects around the world, and myself, I've worked in projects financing before. The last thing you want to do is deliver a fees and then wait 2 years for your permitting, because then all the costing on the feasibility study is outdated, and the farther ahead you move in time, the farther that is in the rearview mirror, and then you wind up with a 30% cost overrun. So we're fully aware of those pitfalls in the industry, and we'll most certainly do everything we can to avoid them. But specifically on the permitting side, there's two major permits: the environmental permit and then the mine permit. So we can sort of talk about those separately. So number one, the environmental permit. We've completed our requirement of 3 years of environmental baseline information gathering. So we've done that. And this year we will prepare and submit our environmental application to the BC Ministry of Mines. And that process is an open dialogue. There's a lot of back and forth, and we know exactly what their expectations are. And Gary and Troy and Brad, we've been through this. Sort of second to that is the mine permit. You can't really submit the mine permit until you actually know what the mine plan looks like. And we don't have the M&I resource or a feasibility study to submit that permit, but that would certainly come in due course. And then the last part of the question was, I believe, on the First Nations side. So we have one First Nations group that's involved in the project, and they reside in the town of Atlin. And we do fall within their catchment, even though we're well south of Atlin. It's the TRTFN, the Taku River First Nations Tlingit. They're an excellent partner, an excellent stakeholder. We have a very, very positive relationship with them. They're fully supportive of the project as long as we dot our I's and cross our T's, which is exactly what we're doing. And ultimately, and at the end of the day, they're probably looking for employment opportunities, not just for the band, but also for the general region, including the population in Atlin. So We're doing everything by the book, and we want to create those jobs for everyone. And it's all one step at a time. But along that note, you'll probably see a news release regarding our relationship with the First Nations within the next 2 to 3 weeks.
So this is an isolated fly-in, fly-out operation with a reasonably small footprint. So maybe talk about the pros and cons of that setup in terms of building a mine and getting permitted.
Yeah, I mean, that's a very intelligent question. And, there's a lot of great projects in BC or Canada that happen to struggle with the permitting process. And often, more times than not, it's related to the scale of the project. So you've hit the nail on the head there that our project is relatively small compared to these large open pit operations that have 40,000 ton per day mills and significant stripping ratios or pre-strips, I mean. So that's not us. We're fairly small. Our surface footprint is small. We would have a combination of dry stack tailings along with backfill that further helps the environmental cause. And the 750 ton per day mill is about as small as it gets to produce 80 or 100,000 ounces of gold per year. Furthermore to that, our permitting track is all provincial within BC. A lot of the larger projects in BC and Canada, they do go through a federal process in Ottawa, but given our small footprint and small size of the mill, our permitting is done locally in the province, which historically has been a smoother, quicker process.
Just looking at some of these. Talk a bit about bio-oxidization. Is that a relatively new process? How confident are you in the use of BIOX? Because really it's the game changer that the company's kind of hanging its hat on to produce gold doré on site.
Right. So if everyone recalls from the slide where I was speaking about the pre-production on the asset during the 30s and 40s, they produced gold in the form of a concentrate. So we've taken that one step further. We want to produce doré bars on site, capture these full high gold prices. And we looked at 4 different metallurgical processes to take it from that concentrate to doré, that final step. And we got the best results working with an engineering firm that the technical people on the call would know called Autotech. And they are the owners of a process called bacterial oxidation, or also known as BIOX, as Knox explained. And essentially, this just oxidizes the sulfides using a proprietary process owned by Autotech. And it's quite interesting that there's now 10 of these mines around the world at a commercial scale that are using BIOX very successfully. If I were to point to an example, a mine that everybody's heard of, Fosterville in Australia, owned by Kirkland Lake. It's not really spoken of at the street level, but a major part of their success is their BIOX unit that actually allows them to produce doré bars on site. And our mineralogy is quite similar to Fosterville. They're bigger and higher grade, of course, but there is some similarities when you get into that sort of granular level. Another example is Nordgold. They operate the Suzdal mine in Kazakhstan, producing 250,000 ounces of gold per year. They also use BIOX there. So we're working with the same people at Autotech that have built and operated these mines, designed them, done all the metallurgical testing on various projects around the world. And we have the highest confidence as possible that this is the flow sheet that we'll use in the fees. Autotech has already given us the metallurgical program. We need to provide 70 kilograms of concentrate sample for them to do their BIOX test work, and that will be directly plugged into the mine plan and operating parameters come the fee. So we're fully aware of all the intricacies involved in that, and all that is ongoing as we prepare for the fees. And that's pretty much everything I can say in a short time on BIOX.
That's great. And back to the fly-in, fly-out nature of the project. What about building the mine? Are you going to have to barge in any like heavy equipment at the stage of building? Was that going to prove a challenge?
Yeah, so I mean, let's just start with the status quo. So we have a fully staffed 20-person exploration camp, and that's all fly in, fly out from Atlin by small fixed-wing aircraft or by helicopter. But as we transition eventually into a construction phase on the project, then we would use a combination of fly in as well as barge in for all the heavy equipment and components required to build the project.
Yeah, because the barging in is a seasonality thing. It's, you have to do it a certain time of the year. But when you're building a big mine, you're going to time that correctly. So,
yeah, there is a seasonality to when you would build this, and we'll get to that in due course. Hopefully, there'll be a lot of planning involved. But like I said in the bios of the management, Gary's done this before in British Columbia at Eskate Creek. That was a smashing success at Homestake, and they were taken over. So, we've got the team here, the foundational team that has done this, and we can certainly execute.
Okay, we'll get just a couple more questions. The typical question: what's your cash flow and your burn rate, or not cash flow, your cash position and your burn rate right now?
Yeah, so we're sitting about 4 million in cash, and in terms of the actual burn rate, it always depends. What do you include in that? Like, VP exploration, do you include them at the project level or the corporate level? But all in, our burn would be about $80,000 to $90,000 per month.
Right, that's just paying the rent and paying the staff and at the bare.
I mean, that's corporate level G&A. Yeah. Just to be clear, yeah.
And then finally, why is your stock price so low, and what are you going to do about it?
Well, I believe that's why you joined us, Knox. You saw the opportunity here.
I got you. Well, I would say that this is a story that's been known in Canada, and infill drilling isn't exactly exciting. But what I'm mostly excited about is when Troy was pointing out those parallel zones that if we show that slide, there's actually some of the future drilling that we're going to be doing to extend those parallel zones. The grades that we're hitting are nice and fat. We're really fattening up the deposit. I think part of our strategy is to get some new eyes on this story. We have no problem raising money on an institutional level. Now it's just at what price. And I think, the entire market's taken a bit of a hit, but certainly we have a good opportunity in that we have a solid asset with, 33 million market cap and 1 million ounces of gold. So there's certainly tremendous upside with a fantastic team, which is why I joined the company. And I think we just need to get some new eyes on that in a combination of, one-to-one meetings, more webinars, and digital marketing to get new eyes on this in the United States, particularly, and in Europe.
Yeah, absolutely, Knox. I mean, the best way to market is to have things to talk about, and we most certainly have that in terms of news flow. It will undoubtedly be more high grade over large widths type results. So there's certainly some ammunition for us to get out there and tell our story a little bit better. And as you said, it's well known in Canada, but the real opportunities here are probably in the US, Asia, and into Europe. We have a great set of core shareholders that are very supportive to see us move this project forward. And if we were trading at $1, maybe people would be saying, hey, this is overvalued. So, there is an opportunity here as well if people are looking at it through the right lens.
Okay, well, that kind of wraps up our time. Thank you, Scott and Troy, and thank you, everybody, for joining our webinar. We're certainly very excited that, we're going to have so much more news to come, and we'll keep you informed. And if you have any more questions, you could contact me directly. My contact information's on the sheet there. And if you want to buy the stock, we're traded on the TSX, not the venture, but on the big board, CCM, and in the United States on the OTCQB at CRCUF. So thank you, everyone, and have a great day.